All right, welcome back, guys. This is a very interesting episode on this our weekly, daily, and monthly market review. This one will be based on the monthly market review as the month of March has just come to an end, and we are going to begin the month of April from next tomorrow, as tomorrow is public holiday. So we are looking forward to Tuesday as our trading day as Monday will be the bank holiday or is a holiday. But before we go into that, let's dive back and uh, welcome ourselves more. Now, the major purpose of these videos of this episode that I do on my YouTube channel at Digital Wealth Academy, Digital Wealth Trading on YouTube. You just go. Please, if this is your first time, do subscribe to this channel. Give us a thumbs up. Comment, give us a comment and give us your own review according to the market. I would like to add this as this is the monthly market review. I am going to base my ideas majorly on the monthly candle. We want to see how our highest expansion next month, where it is going to be. Where are we expecting the next month, the highest expansion of next month to go into? So before I read what I have here, I would like to add this. Trading is some sort of technical, very technical skill that if you acquire you can make good use of it, but it will take you a whole lot of time to be the good or to understand yourself, not even the market, all right, to understand yourself and to know how you want, how what makes you trigger, what trigger your adrenaline, what makes you trigger, what makes you make take any sort of decision, whether you decide to buy or you decide to sell. These are all factors that are necessary for traders to be very conscious of. And if you are able to understand yourself and you are able to understand yourself and you have patience, because trading go in hand with patience, you have to be patient. All right. I am not in the position to tell you this, but one of the things I knew is that we all need to be what extremely patient with this market. All right. And if we look at the market sentiment, there are so many things going on around the world, around the globe that we need to be wary about. But are we going to suffocate? Are we? Let me not say suffocate. Are we going to treasure ourselves about all that? No. Rather, we are going to focus on the charts and do the needful and takes not don't take exorbitant risk. You take the normal risk that you can afford to take, and also you pay more attention on this chart and you do what you gotta do. And I hope God see us through at the end of every situation. So, and I pray that this is the month of Ramadan. So if you're listening, I pray that this if you are a trader, I pray that God gives us the opportunity to understand the market and understand ourselves more, and being able to control our emotion in terms of trading and guide us through the right path that is going to take us wherever we want to be. Amen. I will be going straight forward into what we have for today. And what we have for today is the Euro US dollar monthly contract for March 2024 delivered as an indecisive down close candle, having a long week high, and that and sweep was February month high, that is previous month high, which is the buy side liquidity that was sweep, and that week high trade into the monthly candle range high, which is the between the range high, which is the 60 to 62% range region, which is the premium price before repricing lower. And this statement is some kind of so vivid. So I'm going to expand this particular market. I hope you don't mind. So currently what I'm working with is this range high and this range low. All right, this is the range high and this is the range low. Now, if we have these two specified range, which was created and ever since we've been inside this specific range. So if you mark out the high and the low, the 50% is almost where this blue line is. And what I try to say is here that we this month price higher sweeping below above this February high, which is a buy side liquidity, and also tap into the 62% region. If you check the between the which is the premium market price, if you check the distance between this price and this price, you discover that this is a premium price and it's at the 62% region. So the wick of that candle price higher and tap on that 62% region. Now on the monthly range, we have the range high on Monday 13 July 2023 up close candle, and the range low on Monday 12 October 2023. Indecisive or down close candle. Both form the major range for Euro US dollar monthly contract. What I'm trying to say is that I'm just referring to this candle as our range high and this candle, which is an indecisive down close candle, as our range low. Both form what the uh, major range on the monthly contract. Now, and with an internal range liquidity of the internal range high on Friday, 1st December 2023 up close candle. Now, this is our external range on a monthly. Then we have swing high, swing low. So these two now become what? An internal range liquidity. So we have the high of the internal range liquidity and the low of the internal range liquidity here. So looking at these two specified, this one is formed on Friday 1st of December 2023, which is an up close candle with the internal range low on Thursday 1st of February 2024, which will be the next most or higher probability draw on liquidity. Now, what I mean is that this candle, which is Thursday 1st of February 2024 down close candle that has a weak low, is likely being the more higher probability draw on liquidity. Now, if you look, we have this and we have this. Now we have taken previous month high, then we are going for previous month lows. And for us to take this previous month low, then that means our highest probability draw on liquidity on a monthly time frame is this one. And, now, yeah. If euro find its way lower into the previous month low, which is February 2024 candle low, as we anticipated. Now, we have already anticipated that this is our draw on liquidity, our major draw on liquidity. So if euro find its way into this price, as we anticipated, for price to get below that low, which we are anticipating for price to get below or this low, as the main draw on liquidity, casting forward into the April 2024. Now we are anticipating that this will be our draw on liquidity date next month, which is April, because we are still in March 31st. I'm doing this video on Sunday 31st of March 2024. So it is going to be very important to reevaluate and see if that area will be a liquidity sweep or price will be willing to go lower and seek the monthly range low external liquidity. Now, what I added there is that it is very important that whenever we get below this low, we should be more I don't know how to put this statement, but we should be more focus, not to engage. I'm not telling you after we get below this low, you need to wait, not to engage first. You wait and observe if that will be a liquidity sweep, or it will still lead to the continuation of the market below this low, which might not happen with on April. So if we take this on April, I'm not sure if April is going to take us below this low, except they are going to be so impulsive. That is, the price move will be so impulsive. It could happen that April will take us below this low, right? But it has to be very impulsive, some sort of candle like this. All right, and it is not a liquidity sweep, so we might not expect such candle. But irrespective, we are looking forward to this area. Then if we get below this area, the price is also going to tip its hands to us. And if you are good at, if you know what you are doing, you're supposed to know if that's a liquidity sweep or not. So as long as you stick to me, or not, I'm not telling you to be here, go and learn. You take your time, learn for yourself. You don't need to be dependent on someone to tell you what to do, what to know, what not to know. So but I'm just saying that as long as we are here, whenever we get below this place, since this video is not something I'm doing once in a while, it is a daily video, except that it's not a trading day. I didn't do on Friday because Friday was not a trading day, as it is a bank holiday for US, and I did not trade when neither euro, although euro was actually moving the way I wanted to go, but I did not engage because it's a bank holiday and I really don't want to do anything that day. So that is just it. And continuing, based on the monthly contract, I am anticipating for March 2024 candle week consequent encroachment to remain on tap until the February 2024 candle low is sweep. Very sweet. What did I mean? I mean this, if you check the high of this candle and the opening price of this candle, if you merge it, you will get the consequent encroachment, which is the midpoint of this week, this candle week, the midpoint. So I am anticipating for that midpoint of that week to remain on tap until we pass below this low. That is, after we have swept this low, I will no longer be expecting market to respect this, alright, as we already taking the major higher probability draw on liquidity. So this will now be based on what I am seeing on chart. If the market is still willing to go lower, then we can stick to that. So as long as we stick, we are still trading and we have not taken this draw on liquidity, I want to see this consequent encroachment remain on tap. So if you stick with me, at the end of the April month, we are going to still talk on the market review. And if this is your first time, you can still tumble back into my previous month video, which is the February, the end of February 2022 contract. If you watch that video, you're going to see everything I've stated, how it has played out. Although I was anticipating for higher market price, I wasn't expecting us to reverse. I was looking towards this area of liquidity. Why am I referring to this? Because I want you to know that there are instances where you will call the market and yet it will go as you have said it, but at a particular time, the whole things will reverse. All right, but we have getting towards that area and the market reverse as soon as we have taken this buy side. Like I have seen on that video, as if we take this buy side, then we should be more conscious to see if it's actually going to go higher. So as soon as we take this buy side, which is our major draw area of liquidity, then we now get conscious. Likewise, as I'm anticipating, if we take this low, we need to begin to uh, be more conscious and not try to gamble. Or even if you are going to take a position that you are going to take your profit at this low, you are not supposed to still gamble yet. So all these are parameters that that will guide each and every one of us going in on April. So as long as we know our highest expansion is towards this area, we're going to go on a lower time frame. As me, I'm a day trader, so I trade every day. We're going to go. I don't let me come back. I'm a day trader. I trade every higher probability days. Because if I say I trade every day, it will be like every day I want to go and trade. No, I trade on what in a higher probability days. And the days I don't see higher probability, I don't engage. Something like what? Friday that just passed. As a day trader, I'm not supposed to trade on Friday. No, because it's not a higher probability day. To me, it does not meet my own criteria. If you meet yours, you can do it. Okay, that is just how everybody just need to understand themselves, and that's how we're going to grow on this market. So the monthly, now we're going to talk about the monthly profile, and for us to talk about the monthly profile, we need to go to the weekly candles so we can effectively relate to the monthly profile. So the month begin from here. Yes, so I'm going to use this line to separate We have the first week, second week, third week, and fourth week. So the monthly profile is an obvious first week of the month as the high of the month. That is, the first week of that month creates the high of the month, right? It is very important that you understand your monthly profile, your weekly profile, your daily profile. If you follow me very critically, you will see that I'm always referring to all these kind of profile. Refer to the daily profile, weekly profile, monthly profile. If I'm doing weekly video, I'm referring to weekly profile. If I'm doing monthly video, I'm referring to monthly profile. Likewise, if I'm doing daily video, I'm referring to what daily profile. These are very, very important as a trader, because if you have this data accumulated with you for a year, you can usually come to a particular statistics that will help you in the years to come. And so as the high of the month that sweep previous month high, which is the buy side liquidity, and traded into the weekly up close candle that act as a bearish order block, and price begin to trade lower seeking sell side liquidity. That is, we sweep this previous month high and we price into this what down close candle, up close candle inside a down close trend, which has formed what a bearish order block for us. If you see the body of the candle is respecting that area, wow, time is not going to permit us to go more, we have to go. Now look at the body of this candle, how the candle body is respected. Although we keep wigging inside, but the body of that candle is being respected. That's the higher probability bearish order block. All right. So the low of the month is formed on the last week of the month. That rallying rallying lower into the previous month low and fall short of that low. Which is what I'm just trying to say is that this month, let me take this out of my chart now. So the low of the month is formed on this week that fall short of this previous month low. So which is our major draw on liquidity, right? So we fall short of it and on this week, and this week has the low of the month. Right. So stick with me. I am also going to upload a video, as my video cannot exist more than 20 minutes. So I'm also going to, is it upload or I don't know how to put that. I'm also going to post a video about the how is it called, the weekly market review. So let's go to the XY. um Actually the XY is an inverse price of what euro. So the XY, we have seen a very strong willingness to take the previous month high, but we haven't taken it. So if you are looking for previous month low on the XY, now we are looking for previous on euro, now we are looking for previous month or high on the XY. So now that we are looking for previous month high on the XY, we have our consequent encroachment. Until we take out this consequent encroach, or until we take out this previous month high, I am anticipating for this consequent encroachment to remain on tap. So I don't want to see price take this consequent encroachment until we pass above these areas of interest. So as we expecting Euro DXY to price into this area, we also going to see how we close above it. If we still giving us willingness, if it's still presenting us willingness to go above this high, that is going to be dedicated after we have price above this high. So I think this video will just be dedicated for only monthly. So you'll be expecting the weekly time frame. Also, if you go on the weekly chart, we are going to see various I don't know what all this doing in my chart. Okay, we are going to see various criteria why I'm looking forward for the euro DXY to price into this fair value gap, which is also going to tap on this bearish order block. Now, this is where it gets interesting. For us to have such a strong PDRA on a higher time frame like this, that is depicting us, telling us that there is a higher probability that DXY will definitely come above this buy side. All right, but we're not going to base our ideas on this buy side. If we take this, let's say we price higher, we did not come inside this, and we take this buy side, then before we price lower into this PDRA, then we're going to be looking forward to this. either we're going to price lower, open price lower inside this fair value gap and the bullish order block, then we're going to anticipate for higher prices. Well, I hope this video is insightful, and you did get a good information from it. So let's wait for the weekly